Hey, what's up? Just before we get into today's video, I just want to put a little disclaimer out there. We're just providing information. I'm not a legal source. I'm not a professional of any kind. I am talking to a professional in this video. Take that as you will. If you choose to follow the guidance in this video, so be it. If you choose not to, then don't. I don't really care either way. I get no benefit out of it. Just want to let you guys know that there are things happening. There are changes. Choosing to disregard them doesn't seem like the best idea to me. But again, proceed however you want. Anyway, let's get into the video. Okay, what's up, guys? James Casino, Chocolate Man in Thailand. We are back with Thomas. Thomas, who are you again?
I'm the Managing Director of American International Tax Advisors with Bangkok, although we are in our new patio office at this particular moment.
Awesome. Awesome. Okay, Thomas, we have done a discussion many times talking about all kind of financial matters whatsoever in Thailand. Let's talk about today. Let's update our audience on what is going on with the tax law. And that's, I mean, it's always going to be the number one question. Do I need to pay taxes in Thailand? And we're not going to conjecture, speculate, anything like that. Thomas is going to tell you exactly what he knows to be fact. Okay, let's just stick to the facts. That way there's no concern, feel free to ask questions down in the comments. These guys will be answering them later. We'll give you references. We're going to give you links. So if you want to research the information and find out more details for yourself, if you want to read the laws that exist and whatnot, all the information will be provided down below. But let's get into it. Do I need to pay tax in Thailand? What is the bottom line here?
I can give you a firm yes, no, and maybe.
Yep, there you go. Okay. There you go.
Guys, it is correct. This is situation by situation awareness of this. Okay. In general, okay, you become tax resident in Thailand if you are more than 180 days in country.
Okay, 180 days.
180 days. Effectively 6 months in country.
Now, is this concurrently? Is this simultaneous? Is this consecutively? This is...
It's 180 days. You can break it up however you want to. But it's
so cumulative 180 days. Doesn't matter if I leave the country, go back, whatever. If I've spent 180 days in Thailand,
you are tax resident for tax purposes. Okay. That doesn't mean you have to file a tax return to this, but you're resident for tax purposes here in Thailand. Okay.
Does it matter what kind of visa I'm on? What if I'm just what if I'm a DTV?
No.
Something like that,
And in fact, one of the things about this is there's speculation on, we are the new laws requiring us to file a tax return if you're on a tourist visa here for 180 days.
Right.
Blah, blah. The Thai law does not treat you differently from a Thai native citizen when you're here 180 days. So the rules on who has to file a tax return and who has to get a tax ID number have been in place for decades as far as Thailand is concerned. There's not a new rule that had to be formed for that because they already have rules and laws that state this on who has to file a Thai tax return with this. So you become resident. Now, that doesn't mean you have to file a tax return with this. And it doesn't mean you want to owe tax in this. Okay? Let's go first through who has to file a tax return. Okay? And guys, with this, there are exceptions and everything to this because this is really complex. Like one of the things we'll start in here very early on this is don't try this at home. We give a free half-hour consultation for everybody who comes in through Chocolate Man, refers to you guys. We give yes, no answers on that, with this. And it's done by our licensed Thai tax attorney sitting in the room or a licensed Thai accountant in the room. All of our work is provided, legal work and returns were done by licensed Thai individuals, and we're a licensed Thai accounting firm. Don't try this at home. Give us a call for free and we'll help you out and give you.
What if I do want to go? What if I just say, screw it, I don't want to deal with Thomas. I want to do this on my own. Like what is the...
It's possible to do. The problem with this is the nuances of this are really complex. And one of the simplest things, if you are here 180 days and you are going to have to file a Thai tax return, you're going to need to get a Thai tax ID number. Now, here in the patio office, they're pretty good. You can walk in the office. We have so many people here. They're giving these things out to people. It takes about 15 to 20 to 30 minutes. If you don't want to deal with that, or you go into an office where they're not going to allow you to get that number because they have no idea what they're doing or they don't want to do the work, you can come to us and we can get you a tax ID number. It's $200 US, and we get the tax ID number for you. And it's kind of, it's the same situation on the tax return. The level of complexity on filing the tax return goes massively up. And that system right now is very, very chaotic. Okay, because so many of the issues, how would I describe this the best? As we're preparing the tax returns and we're starting to get these things out the door and stuff, procedural questions come up on how is this type of income treated on the Thai tax form. And one example of this that's very, very specific is U.S. Social Security or U.S. government pensions. Veteran American Force, thank you for your service. With this, your income, they've told us, is exempt from taxation by tax returns. Very clear here in Thailand. You as a government worker, former government employee, can bring that money in on an unlimited amount of money. However, by law, the Revenue Department has said a tax return has to be filed for that. Okay? Here's where this starts getting complex. There's nowhere to put income on the tax return that says $40,000 of income. Not quoting your income level, but say $40,000 of income that's floated in from brought in from the U.S. and is exempt from tax year. You still have to file a return declaring that, but there's nowhere on the form to put that and then take the income off as non-taxable with this. We've had 5 meetings with the Revenue Department and saying, how do you guys want us to do this? And they finally said, do it this way, but we can't really approve this way until it goes through with it. Because they're trying to get their systems updated with that to this. So even our firm struggles to work with them because they don't know, they have never done this before. And so the two sides are working on trying to do this. We have another meeting with a regional supervisor next week talking about functioning of how you do this stuff. So, but when I say this, guys, don't try this at home. It's because the nuances of how you're doing this, to do this. I mean, and we may file those returns with this, especially somebody who's got U.S. Social Security only as a source of income. We may have to file the tax returns, and 6 months later they come back and say, here, you need to refile this one. Okay, we do that at our cost if we have to change the return file. But because we filed by March 31st, which is the deadline to this, we're okay. They can't penalize us or anything with this, but we're working through the system on it. Yeah.
Okay, so we're talking about process here a little bit. Yeah. Let's go back to the law. Is this a new law? Is this new regulation? Can you explain a little bit, like, why is this all coming up now? Why hasn't this been a problem in the past?
It's funny because I believe we dropped the very first video on this 15 months ago. Okay, it was actually 60 months. And to give you guys credit, I called James up and said, this is a big, huge deal. Can you come up and do this? And he dropped everything and drove up to Bangkok that evening, and it hell just rain day to do that very first video on this. We knew this was going to be a big deal. Okay, what happened here was not the current revenue minister, the previous revenue minister reinterpreted the law that's now been recorded in the Royal Gazette. Okay, and this was challenged by several large Bangkok law firms to this. I mean, heavy hitter law firms who said this was not going to pass. All that has now gone away. This is passed and this is implemented. Okay, what the old law said was international income that was remitted into this country that was more than 1 year old to this, excuse me, was not subject to taxation because it was considered savings. Okay, with it. So if say you made $100 million of Bitcoin to this and you kept it in a Swiss account for a year, that money could then flow into Thailand free of Thai tax because it was kept outside of Thailand for a year. And this was not so much a loophole as it was a ship channel. Do this. You could drive a ship to this. And practically no one, Thai billionaires to expats, everybody just never reported foreign income to this. You'd walk into a Thai office and said, yes, I brought this money in. It was less than a year old. The tax office would literally say, leave, I don't know how to do that. And in some of the regional offices, you're still going to hear that. We don't have no idea what you're talking about, leave, we don't know how to do this. But Thai revenue minister, and this has gone through the change of government last fall too, has said most foreigners are going to have to file a tax return with this. This has worked its way up from high, and not every clerk out there has gotten the training on this. in fact, probably hasn't gotten the training on this, to this. You have to really deal with the central office who's just now learning this stuff, and it's flowing down through this. But that law change was all income, regardless of date, has to be reported here in Thailand as long as it's brought back. Now, the chaos in the system of having to go back, well, this was money that I sold a house from in 2009. I was living off of savings. They realized that was an issue. Okay, so, and you can Google this on Thai Revenue website. Everything that was earned prior to January 1st, 2024 is considered savings. Okay, after January 1st, 2024, if you are bringing in your regular pension, interest and dividends and those kind of things, becomes taxable in this country. But that's a key thing on this. Remitted into Thailand. We're not in a global tax system. They're only going to tax the money that comes from overseas into a Thai account through various.
Okay, let's explain just a little bit. What do you mean between remittances versus a global tax system? What do you mean by that?
Okay. And they're talking about moving towards global taxation.
But they haven't yet.
They haven't yet. Okay. What a global system says, and this is the way honestly most countries actually are. You're more than 6 months, you're a resident in that country, you are taxed on your income everywhere to this, except by instances of tax treaty. So if you have a rental property in Topeka and you're not bringing that money in, you're still having to report that income as taxable here in Thailand if you're in a global system with this. So, and then you have to get a tax credit for taxes paid in the US, but if Thailand taxes happen to be higher, you'd pay the top up above that. That's called a tax credit, guys. And let's put it this way. If in the US you make $100,000 and it happens to be taxed at 15%, and in Thailand it's taxed at 20%. What would happen is in the US you'd pay $15,000. Thailand, by the tax treaty, would give you a tax credit for that paid, and you would pay, instead of $20,000 here, you'd pay the $5,000 top up. And in that situation, you end up paying the higher of the two tax rates and the other person giving you credit back and forth with it. That's in a global system.
Which we're not in.
Which we're not in. And remember, that's all your income, everywhere taxed whether you brought it in.
Okay.
This is a system, and this is why the credit card issue is so controversial. This is a remittance-based system, which means it's money brought into Thailand. Now, the purest form of this right now is in India. Okay, the Indian tax system on foreign income is they're going to tax that income coming in, and they're going to tax it horrendous. I mean, they'll check you at the border on stuff. People try to smuggle in gold to get around this on their national income to this. They have a really, really pure, regardless of whether tax was paid on it, they're vicious on the remittance basis. They're better here with this system in that you do get a tax credit back for taxes paid overseas if there's a tax treaty with the country. That's what one of those are stated. And then you can, but also you can use the tax treaties to exclude particular types of income. The biggest ones are U.S. Social Security is not taxable here in Thailand. U.S. government pensions, military service, I should say federal government specifically, to this are not taxable here. Canadian pensions in both government and private forms are not taxable. And UK government employee pensions are not taxable here as well. So if you retired from the UK government and you've got a government pension, it's not taxable here. I'm not saying that's all of them. There's 61 tax treaties or other examples of this, but that's the big group that we'd be dealing with.
So we're saying it's a remittance-based system. However, your income still matters, depending how you get it, what your source is?
It does and it doesn't. Okay, let's use the example of U.S. Social Security. Okay, I've got $40,000 Social Security. I made a lot of money, and I've got a big Social Security check to this. Okay, you can if you file your Thai tax return, and if you're required to, and again, Thai Revenue has told us explicitly that in order to claim tax treaty benefits and not being taxable, you have to file a Thai tax return with this. That's Thai Revenue's opinion on this, and we do agree with it and say follow that because it makes no sense. And I'll go through a little bit that too why it makes no sense to not have to file a tax return. So you got $40,000 income coming that is free of source of Thai tax. Now, the legal theory of this is that's the money that you are living off of. Is that $40,000 of Social Security? You can bring in $40,000 free of Thai tax because you can justify that that's coming from your Social Security. In this particular case, we would attach a 1099 SSA to the back of the tax return, proper legal statements, and do all this with it and sail this through. And they're not going to say this is taxable to us. Okay, but the tax return has to be filed up to $40,000. Now, what happens if you're making $60,000 with this? You're bringing $60,000, not $40,000, and the other $20,000 is, say, a taxable pension that's taxable here in Thailand. In that particular case, you would report $40,000 of non-taxable income on using a tax treaty, and then you would report $20,000 of taxable income on the tax treaty here and pay tax on that $20,000. Now, as we've done this in the past, we've used the tax treaty to advantage for Americans because you could take out unlimited amounts of money on a Roth 401ks, SEP Simples, KIOs, and everything out of the U.S. and not be taxable in the U.S. using a tax treaty. But if you exceed your Social Security and you bring in portions of your pensions, you are taxable here to this. That's a mixed case situation. So when you exceed that Social Security amount, you're probably going to become taxable here with it.
Yep. So depending on your type of income, how it comes in,
exactly.
you may or may not be taxable. It's not just remittance.
Yeah, talk to us about your specific. Well, it is. The money has to be brought into here.
So what if you never bring that money into Thailand?
Now, not taxable.
Okay.
Not taxable to this.
Okay. But we're making the assumption that, if you're living in Thailand, you're bringing in money one way or another.
One way or another.
To survive on, to daily expenses, whatnot.
Let's go through the biggest controversial thing that actually came from an announcement we talked about in Patty C. Expat Club. James is going to give you guys the link to that with it. But the idea that credit cards can be taxable with this. Okay. This is a really big deal in this. And people are like, how can a credit card be taxable to a loan? Now, again, if you're in a pure income situation where they're taxing your global income, the idea of taking money out of a credit card out of an ATM here is irrelevant because it is a loan and it's because you're not yet income to pay that off. That's not the system we have here. We have a remittance-based system. So the money coming into the country creates the reportable events of this. You have to sit there and then go back and look at this and say, wait a second, I've gone to the credit card machine or the ATM and I pulled cash out of the ATM. Right now, that's what they're talking about is pulling cash out with your credit card. They're not talking about spending. That could happen in the future with this, but they're talking about pulling money out of the ATM. So when you go to pull money out of the ATM, that money has been remitted into this country. And remember, this isn't a pure income system on foreign income. It's a remittance system. If you forget that and say this is an income to this, you're missing the point on this. In a global tax system, that's correct. But in a remittance basis, the act of bringing the money into the country creates the event that becomes taxable. Now you go back and look at your source of income and say, I brought in $20,000 using the ATM on my credit card with this. I have $40,000 of Social Security. That's all the money I brought in. I go and report on my tax return. I brought in $20,000 using the ATM to this in a statement that gets attached to the tax return. But that came in from sources of my Social Security to this. It's your income. Or I had enough in my savings accounts prior to January 1st, 2024 to pay that credit card off, and I can justify where that comes into. But the concept of that being a loan doesn't really matter here because it's a remittance basis. Now, in earlier videos last year, I talked about is that they were not going to track the ATM on stuff. They stated, we're not going to track ATMs, we're not going to track credit cards at this point. That hit the wall sometime in December. They issued a revenue booklet that specifically said ATM withdrawals are a remittance.
And the point we're bringing this up about the credit cards, being treated as a loan or not, is because it technically would be a loophole.
It was, I even stated at the time, guys, this is going to be subject to change. So it's a huge loophole. And people were saying, hey, I'll just pay everything with my credit card. And I'm like, you can't really do that because of structuring with this. But that was always such a loophole. They were always going to close it.
Yep. So the who, what, when, why, how, all that. Okay. We talked a little bit about what the law is and whatnot. How do I do it? Okay. What do I do now? I'm John Q. expat, I'm living in Thailand. I've gone over the 180 days, so we've hit that requirement. Yeah. What do I need to do now? What is required of me right now here in February 2025?
Honestly, guys, the single best value in all of this, call us up. We're going to give you a yes, no. Yeah, you have to file. You don't have to file based upon your individual circumstances. I mean, I'm assuming that YouTube would not allow us to do a 2-week video on trying to change you on all this, or teach you on all this stuff. But it is based upon individual circumstances. There are a whole lot of issues in tweaking this in the last year with this. Now, we also talk about how to plan around this as well. The single biggest loophole still out there is gifting to your Thai spouse and or Thai girlfriend to cover your expenses, especially if you're living with your spouse. Now, you can gift up to 20 million Thai baht to your spouse, and you can gift up to 10 million to anybody else, i.e. your girlfriend. In fact, there was a law that a gentleman gave 14 million baht to his long-term live-in Thai girlfriend. The Thai revenue went after the 4 million baht as taxable income to this. The court actually ruled in favor, saying, no, she was effectively your wife over this period of time, and said, here you go, and gave it to her tax-free, the wife. So that term wife, I'm not going to sit there and say challenge that in court, because that can be a pain in the butt. Mm-hmm. But you can play with this. You can also give money for education, and there's a whole variety of different things. We can actually give you that list, as well if you call us. But you can plan to do this. You can move money in. One of the easiest ways to avoid this is, because we get a lot of people, what happens if I want to buy a condo this year? I want to buy a house. I'm going to bring in 15, 20, 25 million baht, 30 million baht in this. My God, they're going to tax me for this entire portion of this. Here's the simple solution. Don't stay 6 months in the country the year you're going to do that. Stay 5.5 months. Bring in the 25 million baht to this if you're lucky enough to have that much money. Bring the money in. Go play golf in Bali for a couple of months. Go home, visit for a couple of months in the U.S. Bring the money in. You have no tax issues. That's really the simplest way to plan this if you're going to bring a big...
But that's an unfortunate strategy to have to play.
Don't get me wrong. But how much, potentially tax on, 20 million baht is what, 40 million? Or
you can't see them. Can you not see them providing a possible exemption or exemption for something like that for a home purchase, or for, if you're having a big ticket item? That doesn't seem fair. Matter of fact, that seems like it would hurt. I mean, and we're getting into a bit of a conjecture and speculation now, but that seems like it would hurt the market to me. If I'm going to make a 15 million baht purchase in Thailand and now I have to play games to avoid taxes on it.
Don't get me wrong. It's one of the natures of tax systems. You always have to pay tax. I mean, one of the wackier things about taxation is, I don't know if I ever told you this, why do the British like gin so much? Did you ever find the story out?
No.
Can I tell you this one? Okay. By the way, I'm not bad-mouthing people who like gin. I can't stand the flavor of it. By the way, I always wondered why it became so popular. It turns out that in one of the wars with the French, the British were at war with the French for years and years and years. But their number one alcohol consumption was brandy. So they're at war with the French, but they're importing huge amounts of brandy, giving the French the money on this. So the Queen at the time, whichever one it was, famously put like a 400% tariff, 400 or 500% tariff on brandy, but made Geneva wine the tax-free completely in England was. And Geneva wine was at the time the name of what gin was called. So the British switched en masse to gin to do this because it was much cheaper to do this. And oddly, a little bit of wackiness on this, the term bootlegger comes from that point in time, not in the 30s in the U.S. to this, because the sailors, the brandy was so much more profitable, they would wear these boots that went all the way up to the waist and stuff bottles down their face and walk up past the tax guys to this. So bootlegger is actually all this. So moving around your affairs to get around tax, it's old school shit.
Yeah, definitely. I mean, that's, the term loophole and whatnot.
One of the things about this, we're not, there's wacky stuff going on, because I'm an IRS enrolled agent, which by the way means I don't work for the IRS to this. I'm enrolled to practice for the IRS and have been, about 16, 17 years now with this. So all that means is I'm federally licensed to practice for the U.S. government. I'm not a CPA or an attorney. I have all these law license stuff because I don't want to I'm not practicing divorce law, blah, blah. I'm not doing heavy, I'm pure tax. And the only real tax designation in the US was the IRS enrolled agent with this stuff. But all of that flows in how you do this. But we are not advocating for Thailand to change to OECD rules to this. I don't have the ability or the political clout to go in and tell them. I don't work for the embassy, to this. In fact, one of the things about this, there's IRS agents in Thailand, blah, blah, telling, advocating for this. The IRS closed all of its foreign offices 8 or 9 or 10 years ago with this. The only officers that they actually put overseas as far as the IRS is concerned is actually in money laundering cases with the FBI. They will send somebody over to attach for a money laundering case because I don't know if you remember, Al Capone never got arrested for anything else other than tax fraud to this. So they go after the criminal groups using the IRS with this. But even then, the IRS itself does not advocate for tax changes. The Treasury Secretary may, to this, or the State Department. In fact, it's the State Department that negotiates tax treaties. It's not the IRS, which oddly pisses the IRS off because the State Department doesn't know a whole lot about taxation to this. But get rid of the rumors that the U.S. is trying to force Thailand to do this. There's no IRS agents here advocating to do this.
Yep.
Treasury may be trying to move some stuff across the globe with things, but the reality of it is, this is Thailand was trying to close that huge-ass loophole. And honestly, again, and I'm not trying to badmouth that the minister who did this in the first place, he had no idea the complexity of what he was going on to. We have spent, since we did this meeting, we've had 4 or 5 updates, to this. And, probably going to have to sit down another 60 to 90 days and do this again as the rules are changing and shifting to this. And we were talking earlier about this, before we did the video. The U.S. passed the Foreign Account Tax Compliance Act, which forces all the banks to report back to the U.S. FATCA, almost 15 years ago to this. It took them 7 years to get their reporting procedures done in the U.S. and that rule with this. If Thailand gets this in place in 24 to 36 months, where it's solid reporting requirements, everybody knows the rules, we've beaten the crap out of what the U.S. would be capable of doing this. These guys, the Revenue Department, to give these guys credit, they're taking a huge challenge that I had said last year, there's no way they're going to be able to do it. And it's still not done yet. This morphs and changes meeting by meeting with the Thai Revenue Department.
So knowing that information, looking at your qualifications, all that, 30-minute free consult. Okay, I call up, I listen to what you have to say. That's all good. I'm like, nah, this dude doesn't know what he's talking about. I don't agree.
Nope.
I've read the law. I don't think it's going to work. Like, what then? What if I just say, you know what? I'm gonna just keep doing my own thing. I'm just gonna sit home and not worry about this. What are my consequences? What kind of situation am I gonna put myself into if I decide not to use your service, not to file taxes, not to do anything? I'm gonna keep bringing money into Thailand. I'm gonna keep living my life normal. Like, what are the consequences? How are they enforcing this?
At first, what will happen here is probably nothing to this. Especially the first year, you're probably gonna get away with this. The Thai revenue is very specifically, and this does have to go through Parliament. There was an article September, October last year. Thai revenue is specifically going in, and it has to go through Parliament to get Thai tax department to mesh completely with Thai immigration. So when that law passes, Thai immigration will be linked into the Thai revenue authorities with it, and one of the things the first thing they're going to start asking is, where's your Thai tax ID number to this? And that'll be on probably your 90-day renewal. You'll have to go get one, hopefully that takes a certain amount of time.
Yeah. Now, just speculating at this point, but we don't know how to.
This is what the legislation is trying to do with this.
Okay.
Now, the next step of that would be they want the Thai tax return as part of your thing. And you already have to do that as part of a work visa issue. You have to provide the Thai tax return as part of a work visa issue. That will move into all the other types of visas on this stuff. Now, the overall penalty on this stuff, it's not a new penalty. Not having a Thai tax ID number, the ultimate penalty on this, and not having a filing your Thai tax returns can be considered criminal. You can actually go to jail for tax fraud if they believed you owed tax and you were cheating on your taxes on this.
Or evading.
Yeah, to this. There is criminal penalties. Now, that's not somebody who has Social Security to this. Or deportation. Now, at this particular point, that's not an automatic system. Thai revenue has to catch you doing that and then send that to Thai Department of Immigration and everything, and out you go with us.
Yep.
It'll be similar to what happened with, the people who didn't overstayed 90 days and stuff. Take a while to catch up, and they're gone. Now, for most people, what's going to happen in the situation is they're going to get asked this, and they're going to look in, at some point, somebody's going to look at their stamps and go, wait a second, you were tax residents the last 3 years. We don't just want this year's return. We want, go back to the year you started being tax resident, get the returns done, get the, get your tax ID number and all this kind of stuff. You got to backdate all this, and you got to do this very, very quickly. Because remember, on your 90-day stamps, once you go over that 90-day, if they don't give you that stamp, you're in overcharge on this. And if you hit 90 days without doing your taxes, out you go at the door. So they're specifically putting that in place to do that.
My problem is, I think one of my biggest issues with this is are people who are just straight, they don't watch YouTube, they don't use tax professionals to file their taxes. You got some 70-year-old guy living in a condo who just brings in his normal amount of money. He's not aware of any of this stuff going on. He's not plugged into it. He has, a legitimate ignorance of the law. He has no idea that this stuff is going on. What would be the penalty for somebody like that? Or are they just how would they deal with a person like, of course, we haven't had enough experience with this right now to give a real, scenario, but, what do you think would happen in that situation?
It was effectively told to us that that's not going to be an excuse. This is all published in the Royal Gazette, and, I would think they would take that on a case-by-case basis and do this, and I think they're going to be much more forgiving on the people who don't owe any Thai tax, which done with a little bit of planning can be minimized with this. And we can help out with the planning on this as part of the tax. And by the way, our average return on this is $400 US to do a Thai tax return. We're not trying to charge somebody $10,000 or $20,000 on this thing. We've got the staff on this, about that. And sometimes for us, it's going to be easy. Now, if you've got 20 rental properties, you are bringing in money, and obviously it steps up in charge. But we're trying to keep that average return at $400 US for people. Do this. And we don't just do Americans, by the way. We're doing Australians, we're doing Canadians, we're doing Brits, a lot of Germans and Swiss, and everybody's coming into this.
So $400 is not a lot of people, not a lot of money for a lot of people. But again, for that 70-year-old pensioner living in a condo, is he going to get charged at $400? Or do you think in his situation, it'd probably be very simple to hey, look, you don't need to worry about it.
The pain in the butt of structure this is still $400 to this. But because, like I said, the rules in this and the chaos of probably having to go back and change these 6 months later is here. Now, what the Thai Revenue Department is going to do to those guys if they don't file, more than likely there'll be grace. The problem with that is when they're getting grace on that, because, and this is the way I was thinking about it, if you don't owe any Thai tax, the penalty for not filing by March 31st is 200 Thai baht, okay, with this. Not a huge deal. If you owe tax on it, that accrues at an interest rate of 1.5% per month. Now, we had a case that Cha-Cha was working on, my lead Thai attorney, to this. And the gentleman was fairly well known, but he made a mistake, and this is one of the issues of this. He made a mistake because he was a dual citizen. He thought he had to deal with tax only in the U.S. He dually filed his tax, and he didn't use exclusions properly and everything, and he paid a big tax bill in the U.S., but he didn't pay the tax bill here thinking, hey, I'm a U.S. citizen, blah, blah, to this. He got it backwards. To this. And when it came down to it, the Thai government got him into the revenue office, put him in a locked room, and said, you owe us, I believe it was 14 million baht to this. Because it went back about 8 years. So they went through this. They didn't let this guy have an attorney in the room. They fought this, and they said, you have to sign this or we don't let you out of this room. We send you straight to jail with this. His actual tax bill was 7 million baht. The penalties and interest was 7 million baht on top of that. Now, this got real complex. He went through a whole bunch of firms to this. He came to us, at one point, how do you handle this? How do you help, even anybody help me with this? Because his problem was the statute of limitations in the U.S. was normally up after 3 years. Can't go back and get a refund after 3 years. My tax manager and I went through and researched this. The only exception to that is if you've overpaid foreign taxes too much, you can go back 10 years. That one little loophole will get him, we can't get him out of the penalty of this, but he will get his refund back to the taxes he paid in the US, plus interest back all the way back to the 8 years ago. This is the reason why you need a special, because you could end up in a meat grinder situation of getting something backwards that seems relevant and do this with it. And again, we're not charging a huge amount of money. A lot of companies are charging more for the initial consultation we're giving for free than the tax return. But and again, you're not going to go to the lady in the province who's been doing, the farmer's tax returns for years. She's going to have no idea about what a tax tree ever says to those.
Gotcha. All right. Well, we pretty much covered all the topics there. I do want to ask your opinion. How should foreigners look at this? Like, some guys are still probably going to be a little terrified about this. You know what? I'm just done with Thailand. I'm not going to mess with this. I mean, what would be your advice to somebody coming up to you and say, hey, man, I got a 401k. I'm bringing $50,000 a year into Thailand for my living expenses. I just bought 2 condos or whatever. What would you tell somebody in these situations? And the average expat coming in, what would you tell them about this?
Give us a call. I mean, it still comes down to that, because we can tell you, hey, wait a second, no, you can deal with this particular way to this. We can try to jockey your positions in a way that minimize your tax standing on this. How you do this, and you may say, like I said, anything prior to January 1st, 2024 is not taxable here in Thailand to this. So that's one of the ideas of this. Proper planning can really, really help you minimize this by using tips in how you do this. And I'm not going to say tricks, but use the tax code to your advantage, instead of just going blindly forward into the dark with this stuff. It helps you out tremendously. But if you do planning on this, you can do this. I mean, Ken Brown is actually in the room right now, not part of this meeting to this. One of the things you can do is, if you really want to replan how you're doing this, one of the tax treaties that you can do is you can set up a Hong Kong pension distribution. The Hong Kong pension would allow you to move your money out of your 401k free U.S. tax. You would roll that into your Hong Kong pension free U.S. tax. And because the Hong Kong has a tax treaty with Thailand, you can pull that money out of the pension and free of tax here in Thailand to this. You can we call it daisy chaining your tax trees in the way you're planning. Planning helps you do this efficiently to this. There are ways to do this, and that will minimize your tax and help this. And one of the things about this is I don't, this doesn't constitute legal advice to you guys, to this, because you're not my client yet to this. We do have the Thai legal attorneys who do this, but we do try to give you guys information in every video, every seminar we do, because you're sitting out there trying to go into the dark or trying to find this stuff. And there's a lot of people who are out there who are anti this thing. I don't make these tax rules, guys. I don't make the tax laws. We're trying to make them as efficient as possible and find out what they are to this. I'm not advocating to this. We were growing at 40 to 50% a year just doing U.S. tax returns. And by the way, I operate all the way from Saudi Arabia all the way up to the Philippines. We've got offices in a lot of countries. This is our home office. We got 28 people here now to this. We're in the brand new patio office with this. We're growing fast. We opened this office up specifically because there were so many expats here to this. Well, we've added a huge amount of Thai staff to handle this with this. And our big issue isn't how to describe this. If just the conservative people want to do this with us, I'm worried we don't have enough capacity to this. But again, you guys make good comments about James on this. He's been on this since day one to this. We've talked about this numerous times through numerous meetings on this, overall with this, and if you go back and watch the first series of videos we did this, we knew a little bit of this. We've got a whole lot more information, and honestly, in 3 or 4 months, we're going to do another update on this, and we'll keep you guys going, because the Thai revenue is pushing this out as fast as they can on rulings and regulations with us too.
All right. Well, I think we covered it all. That again, I want to plug Thomas. Call these guys up. It's a 30-minute free consultation. If you don't like what he's saying, then hang up in his face. It's cool. I mean, he's not going to get offended by, I think there's some frustration, some anger out there, some misinformation, some disagreements about certain things. And if you feel like this doesn't apply to you, don't do it. Sit on your hands and don't worry. We're not saying the government's going to kick you out tomorrow, or that they're going to come and throw $1 million baht tax levy on you or some crazy thing. We're just providing the information. This is all based on what's in the Gazette, what's coming from the Revenue Department, from official sources. They have lawyers in their office. They are Thai. They are registered and legal to operate in Thailand. Don't know how to make that any clearer, so you can get a better understanding, know what's going on. The best thing I can advise you guys to do is to make the call. Make the call. If you're not sure what to do, hey, I only come to Thailand 2 times a year, but I am here for 180 days. I'm just a tourist. I don't make a lot of money. I travel around the world. Should I worry about it? Should I be concerned about it? Go ahead and get the call. It's 30 minutes. It's free. Find out. Yeah, they do have offices in Bangkok. They do have offices in Pattaya, but you can't just get on the phone. Wherever you're at in the country, just get on the phone. If you're still in the States, if you're still in the States and want to give them a call just to get the information, or send them an email. We're going to have all the information down below. So if you want to get that consult, I highly recommend it. It's not about them making money off you guys, about doing it right, doing the proper way. They do have a business to run. They do have to charge somewhat of a fee if they are actually going to process your return, but they can give you advice for free to let you know if you even need to do that or not. So that's the bottom line.
Thank you, James.
All right, Thomas. Awesome. See you on the next one, guys. Okay, so that's the video. That's the information we're providing. Hopefully you made it all the way through that. I know there was a lot of talking in there. It's about 30, 35 minutes long. I know you probably didn't hang out. Maybe you skipped to the end and you're just watching this part now. The bottom line being, if you're in Thailand over 180 days and you are not a Thai citizen, you may be incurring some sort of tax responsibility here in Thailand. What that is, how it works, should you talk to a tax pro? All those are decisions you're going to have to make for yourself. If you don't do it, that's up to you. Me personally, I'm going to use my friends here and we're going to file my taxes, and I'm going to do what's required of me in Thailand as far as the law is being currently interpreted. If you do not agree, that's okay. If you want to just pretend this isn't happening, that's fine. I'm not going to argue with you. I'm not going to debate with you. It is what it is. All right. Anyway, guys, that's the video for today. James Casino, Chocolate Man in Thailand. We'll see you later.